Salam alaikum. I chose this title because exactly a year ago on this stage, as an industry, we had just been through the worst of times. COVID impacted our industry probably more than any other industry in the world. We had unprecedented closures, demand drying up, and it was a pretty terrible 18 months. However, the theme of this conference was to rise again. We had a determined optimism that the industry would recover. And a year ago, I forecast that this region, and Dubai in particular, would lead the global hotel industry recovery. And it certainly has, because for the last 12 months, it has been the best of times across the region, and you'll see that shortly. The real question, though, is with all those headwinds that Pat talked about, what does the future hold? And as a spoiler alert, I can tell you that we are optimistic, and I'll explain about that in more detail. And the way I'm going to go through the presentation today is to give a world overview, then head on to the Middle East and what's happened in performance over the last 12 months and where we are now, and then most importantly, what we can expect in the years to come. So starting off with the world picture, looking at occupancy and that global subcontinental level view of where the industry has recovered relative to 2019 levels. You can see occupancies in July there, but then the most important thing to focus on is that small bubble there that shows how far off 2019 levels of occupancy we are. And you can see that in most places from the middle of the world and westward, we are sort of mid-single digit occupancy percentage points behind 2019 levels. Much, much better than what we're seeing still in Asia and the East and China in particular, where the zero COVID policy is holding back the recovery of those markets. But nonetheless, certainly when you look at the Middle East, 7% behind 2019 levels is fantastic. More importantly, though, what we've seen is unprecedented recovery in rates. We've seen rate growth accelerate everywhere in the world except in Asia. And you can see here in the Middle East that rates for the year are about 20% above 2019 levels, and most importantly are accelerating. So for the most recent months, close on 27% ahead of 2019 levels. So that's obviously fantastic for our industry, and hoteliers are really celebrating it. But the one group of people that are not celebrating that rate growth is, of course, the central bankers. And I actually have some footage from the Jackson Hole meeting a couple of weeks ago of the central bankers when they saw the rate growth that the hotel industry was achieving, because obviously that feeds into the inflation numbers that everybody's worried about. Obviously my reference of them as a Muppet has absolutely nothing to do with their assertion that inflation would be transitory. But there you go. So spoiler alert, that does create one of the headwinds we will see for the months to come as interest rates continue to go up and reduce consumer discretionary funds. Nonetheless, when we look at where we are now, rates are, on absolute terms, way ahead of where we were in the 2019. And you can see the Middle East, without a doubt, is the global leader, with rates at $167 now, much higher than any other region in the world. And that's really important because it shows you what makes this region so fantastic to invest in and the returns that it generates. Last global picture slide is looking at RevPAR. And the really important thing here is that except for Asia, we've seen RevPARs recover at or above 2019 levels. And this is really only a year after we started implementing those vaccines, and only recently are people saying that the pandemic is officially over. It's just a year to that full recovery. Coming out of the 2008-9 financial crisis, it took 5, 6, 7 years for RevPARs to recover in most places across the world. And in fact, in Dubai, it never quite recovered because it came up from such absolute highs. So that is a really great achievement for our industry, and it does show the resilience that we have. So just focusing on the Middle East then, and looking at past and present in a bit more detail. And here you can see occupancies indexed by week from the beginning of the year all the way to where we are now. And the most important thing there is there are some downs and ups, but it's that consistency of recovery that we've seen come through, particularly in the last few weeks, where we're now pretty much fully recovered on a weekly basis. Just another note on these slides, we've adjusted the Ramadan Eid period for the change in position in the year on year. So that's a like-for-like comparison. And when we look at the cities that have driven that recovery, there is no doubt that Dubai, Riyadh, and Abu Dhabi have been the strongest performing markets this year. And underpinned by the strong domestic economies and obviously major events that we've had in Dubai in particular. Now, you might say, well, that's not that great because none of them, except for Riyadh, are fully recovered. But you have to remember that there's been a lot of supply growth in that period, so 5-6% supply growth. So demand is definitely fully recovered in many of those markets, but the supply growth has just stopped that full occupancy recovery. And you also have to remember that this does still include periods of the year that have very much been impacted by COVID, still restrictions on travel. So fantastic performance around the region. Looking at rates, again, really consistent rate growth in most weeks across the year. And as I said, trending at around that 20% up year on year. And when we look at what cities have been driving that, again, it's Dubai with all the mega events achieving rates on average 25% above 2019 levels. Without a doubt, led by the luxury segment of the market. Luxury hotels rates up 40% plus. And as you head down towards the bottom end of the market, we see those rate increases decreasing to about 20% in the mid-market and then only about 10% for economy hotels. So it's definitely been a recovery underpinned by luxury, more than recovery, but growth. And all of that has flowed through to world-beating recovery and profitability. Across these major countries, we've seen GoPar up $5 and GoPar margins improved by 5 percentage points from 2019 levels. And that really is incredible. And that comes from a combination of obviously the top line improvement in RevPARs, the resilience in F&B revenues, so total revenues have gone up, and you can see here UAE as an example, but also importantly, a lot of restructuring of bottom line costs. So we've seen more efficiency come through operations, and that's why we see labor costs per available room actually going backwards year on year, which as a result in the UAE means that GOP per available room has gone from just about $80 to over $100 and a 25% increase. And I can promise you that every single hotel investor in the world would have bitten their hands off if you offered them that a year ago. So what about the future? And I'm going to start by looking at the immediate future because we collect business on the books, so actual hard bookings that consumers have made to hotels for the next 365 days. And we can look at that and get a sense with hard data how the next 3-6 months is going to play out. So looking towards the end of the year here, you can see business on the books for Qatar, Abu Dhabi, and Dubai. And that is broadly what you would expect to see, with the exception of those jumps in 2019 before the pandemic. So business on the books is generally back at what we would expect prior to the pandemic. And then we have a couple exceptional events that we can obviously know are coming and are going to drive demand even further. The first and obvious one is in Qatar. The World Cup final will see a huge surge in performance there. Although interestingly, you would expect at this stage all of the rooms to be sold out, but they are not, as they've been slow to release to the market. And there definitely are some concerns that the approach to the way the rooms are being released is going to restrict that demand some. More on that in a bit. In terms of Abu Dhabi, looks very much similar to last year, although we will see a much stronger performance from the Formula One event coming through in November this year. So that should drive a much stronger performance than it did last year. And then really interestingly for Dubai, and this one did surprise me, I would have expected with particularly the World Cup on the horizon that we would see more business on the books this year than the same time last year. as people use Dubai as a base to travel to the World Cup. And certainly we expect that, but that's not playing out in the numbers yet. So people are not booking and securing hotels more than they were last year at this time for that period. But we do think it will pick up. We think it will pick up because, just as an illustration, you know, the amount of demand for room nights in Qatar during the World Cup will far exceed the numbers that I'm putting here, which is the number of stadium seats across the major stadiums. You can extends up to almost 200,000 tickets. And then you've got all the players, you've got the support staff, you've got the media. There's a huge amount of demand that is going into the country. But there are only about 42,000 hotel rooms in Qatar. 42,000 hotel rooms, another 60,000 or so serviced apartments, and then the other temporary accommodation that is planned would take it up to 110,000 room nights available in Qatar during the World Cup, which would not be enough to satisfy all of that demand. So I do expect there will be spillover demand into surrounding regions, and it'll be interesting to see how that plays out. So what about a bit longer term? Stretching beyond just the end of this year and into 2023. And the biggest question there is around rates. We've seen this massive rate increase, particularly here in Dubai. Will it hold, or will we see rates going backwards? And as a comparison here, I have put European cities and I've put Asia Pacific there. And what you can see at the top is European cities. We're expecting the rate increases that have been seen there to flatten as we head into next year. Asia Pacific, because those rates haven't come through yet, we're seeing that'll recover. And then you may think that our forecast for Dubai and Abu Dhabi is a bit negative because we do see rates declining as we head into the final quarter of this year and the beginning of next year. But you have to remember that that is off the back of the sort of unprecedented demand and rates we saw with World Expo coming through, and with the region being one of the few regions open up in the world for international travel. So we do see it going back, but when you put it in perspective and you look at RevPAR, and here you can see RevPAR indexed to 2019, that dotted line. 2020 and 21 obviously not fully recovered. In 2022, we do obviously expect it to be fully recovered. And then what we've shown is nominal RevPAR and real RevPAR. So real RevPAR taking off inflation is the light purple. And these forecasts go all the way through to 2026. And what that says is even though rates might dip back a bit next year, we are forecasting that in the UAE, we will have real RevPARs that are well above their 2019 levels going into the future. And yes, you could look at this and go, well, that seems optimistic. There's a whole bunch of supply coming online. I'll talk about that in a bit. But you've got the global economic outlook, which is obviously hugely concerning. But the important thing about what Pat showed there is, yes, it's concerning, but there were no negative numbers in the global economic outlook. Yes, Europe was pretty terrible at 0.6%, but I'll tell you what, if Europe grew by 0.6%, I would bite your hand off for that, because I think it might be a lot worse. But there were no negative numbers. And more importantly than that, for all the global risks, I think they'll be more than offset by the regional upside that we've seen in the domestic economies in the GCC and in the UAE. So that global negative will be offset by domestic positivity. You could also say that this is overly optimistic because Dubai and the region in particular benefited from opening up more early, being more agile as we came out of the pandemic. And as the rest of the world opens up, President Biden said yesterday that the pandemic is over in the US, more and more international markets opening up. As they open up, there's going to be less demand that comes here. And all that pent-up leisure demand, well, that's going to go away. Surely that will mean that this won't materialize. And I would counter that, and I would say, yes, those things are negative factors, but there are also positive factors. Because when Asia does eventually open up, there'll be pent-up demand coming from Asia. Yes, there's been pent-up demand from leisure that's been used up, but the pent-up demand from business travel has definitely not been used up yet. And yes, the pandemic is over. Dubai is no longer, and the UAE is no longer the only horse in town. But when we survey consumers, they say that when the pandemic is over, they're likely to travel internationally 25% more than they did before the pandemic. So I think those factors will offset those negative things. And then the final thing I'll touch on is business travel. Has business travel habits changed forever? Many people are forecasting that business travel will only be 75%, 80% of what it was before the pandemic. And yes, there are risks, and yes, there are some major corporates that will travel less, but the shape of that demand will change. There will be more bleisure travel, and I do have a better name for bleisure, by the way. It's called mullet travel. So mullet travel, like the haircut, where the front is short and nice and neat, and then the back is long and wild. So there you go, much better than bleisure. So I think these things will offset each other, and that's our reason for positivity in our forecasts. The last thing I'll touch on is supply, because we have seen, particularly in Dubai, that when you have thousands and thousands of rooms coming into the market, it does put pressure on hotel performance. We operate in a perfect demand-supply economic model. And there is no doubt that there is huge supply coming in across the region. But should we be concerned? And I'd start at the Middle East level, and I'd say for all that supply, for all that pipeline, it takes time to build. And when we look at our forecast of the number of rooms that will open up over the next 3 years, it's about 16,000 rooms per year across the Middle East, which is broadly about the same as what we absorbed for the past decade. So at face value, across the whole region, yes, there'll be rooms to fill, but it's not cataclysmically higher than it was before. And when you break it down by sub-region and you look at Saudi Arabia, the fastest growing market, even in that market, that rooms is only going up from 4,000 per annum to 6,000 per annum to the next 3 years, which, yes, will put some extra supply in the market, but demand is growing at such a rate there that we feel confident that that should be absorbable. Here in Dubai, it's the opposite. Dubai supply growth is actually going to slow in absolute terms. After the boom of growth that was created in the run-up to World Expo got built, we're seeing those projects to slow down, which will give some stability in the market. And so I would finish off in saying that, yes, there's some challenges. Yes, there's uncertainties, but guess what? There always are. And that just like the last 20 years, I wouldn't bet against this region continuing to outperform because of the way they approach investment, because of the agility of the governments and the investment that they put into the economies. And so that note, I'd say thank you.